All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 98. We are here after a 2-week hiatus, and we are back. What better way to come back than on Q3 earnings 2023? This was one of the most interesting earnings that we've seen in the world of Palantir. Stocks up 25% 2 days after earnings. So, I mean, it's pretty exciting. We got a lot to break down, a lot to discuss. I have Arnie with me, author of PalantirBullets.com. I have Dom Rinaldi, Vince, Matt Money. All of their Twitters are in the description, so please make sure you take a chance or just take a second to follow them. And we're going to spend the next hour and a half really discussing what I think was one of the most monumental earnings we've had for Palantir. Obviously, the market reacted very positively towards it. And I think there's a general sentiment across not only the investment community, but sort of everyone who's been a fan of the company that things are changing and we might be at an inflection point in terms of the trajectory of growth that we're going to see for Palantir. So without further ado, I'll just throw the question out there and whoever wants to start can start first. Or well, let's do this. We'll go around the room and say, what were your raw thoughts on earnings? You don't have to go super deep and then we'll go section by section. Matt, 30 seconds to you. What were your raw thoughts on earnings?
I thought it was well received personally. Was it the best quarter that I was expecting? It didn't blow my socks off. It was about what I expected. To me, it's a stepping stone in the absolute right direction that we need in order to justify the valuation at $38 to $40 billion. And I hope that this is just the beginning of hopefully the S-curve starting. I don't want to get ahead of myself, but I could easily start to see when you look at $500 million adjusted free cash flow in the last 12 months, $500 million adjusted free cash flow in the last 12 months, that you're starting to get to something where it justifies even having a valuation above $10, $15. So I think that if it continues to grow at the pace over the next 2 to 3 years, then it'll build into this valuation that might be reasonable. So we will see, but a good quarter stepping in the right direction. You're muted, my guy.
Sorry, I was on mute. Arnie, your raw thoughts, 30 seconds on these earnings. You're muted as well, Arnie. You're muted.
Okay, look, Matteo Lunghi from Palantir in the chat wrote, Arnie, go to sleep. And the reality is that I woke up yesterday early at like 5 thinking, oh my gosh, it's happening. It's like those moments where when there was the reopening of the COVID and I thought, wait a second, it's happening again. So it's like things are unlocking. And that's the impression I had. I had that gut feeling before when we had the previous results. Now I feel we have the confirmation of the business finally taking that velocity escape. Now it can go still further, but I think we have the best hint that our thesis is right.
Okay. Vince, your raw thoughts, 30 seconds.
That this was by far the best earnings, and it keeps getting better the more you dig into it. And there was a lot of hints that I think that we're going over 30% growth. They didn't explicitly say it, but there was a lot of hints. And the fact that they're doing 10x the pilots in November month, I mean, like they're doing more in November month than they did all of last year, is a sign that their sales funnel is accelerating. 12x, more than 12x, which should result in a lot of sales. The fact that they are starting to have customers that came in, that go from pilot to paying customers to large contracts. They had a customer that they closed on $40 million that came in the same contract, was done with the pilot, closed, is really, really amazing. So I think that there is huge quarters to come. And the more I look at this quarter, the more excited I get.
Okay. And Dom, 30 seconds on your raw thoughts.
Simply put, they are learning how to efficiently run the business and run it how they want to. And now the market is understanding that it's a good way to run the business long-term. For a long-term investor, I would rather invest in a company that can run 10 to 20% year-over-year gains consistently for the next 10 years than a very bumpy up and down ride. Really good.
Okay. So I think let's start with this first topic, which is boot camps. The only reason I think we saw the beat on revenue, accelerated gap profitability, better margins on their operating income is because it seems like, to Dom's point, they are starting to learn how to sell. Sham Sanger said they're doing 70 boot camps this month, which is more than they did all of last year. Alex Karp has echoed that in these boot camps, there's a certain unique way that they're not even really selling the product. They're just, getting customers to understand what the product is like, educating them about the product. And as a result, they're probably converting way better than they've ever did before. I'm going to say a quick thing on this, and then we're going to start with Dom, because you've been in software sales, and I want to give whatever insights you can give on AIP Bootcamp. My quick takeaway is Palantir has never been a sales culture organization. They've always been product focused. And this is a go-to-market strategy that is literally product focused, because they're building products within the quote unquote selling, which I just think, I don't know how they figured out that would be the way for them to maybe catch an inflection point and really start scaling this bad boy. But they figured it out. And we still have to see if it's going to be super successful. But for a product-driven company to just sell with the product, give it for free. I mean, literally to ask for nothing. And if you really find some use cases in it, then they can start monetizing or beginning to ask for revenue, I think is absolutely genius. So let's start with you, Dom. You work in software sales. Can you give us a little bit of insight of what you think this go-to-market strategy looks like and why it's being so effective for Palantir?
You can only do this method of go-to-market if your product's that good and it can stand on its own and actually prove value that's quantifiable. It's literally the reason why I invested in Palantir 3 years ago. Very few companies do this to this level. I think they figured it out. I do think they were listening to the retail community, Amit. I'm convinced they actually do maybe not watch us all the time, but they watch Twitter, they hear, they listen. Maybe some of their employees do, but we've been saying for about 2 years now, just get hands on keyboards. We know as a retail community, we've watched enough videos. If you've gotten your Foundry's badge, you know the product is light years ahead of anything else. Now they've found a way to just solve one problem. Pick your problem, bring it to us. We'll have our forward deployed engineers in a lab together, and you can go back to your CEO or someone like that and say, look what I was able to do with this. And I quote some of the customers from the earnings call. We were able to do 1 day's worth of business outcomes versus the 4 months it took with our public cloud hyperscaler. 1 day, 4 months, huge cost savings. This is 10x faster with 3 less times the resources. 1 day versus months. When you have a product like that and you know it can deliver that and it's so far ahead of the competition, the next challenge is how do you get enough people trained up on it to then get the message out there? The encouraging part, and I'll end with this, is we're still in the very infancy stage. Go ask your friends, go ask a coworker. Do you know what Palantir is? Have you heard of them? Still probably not going to get a lot of people knowing what you're talking about. That's a good thing for us long-term investors. That means even if the price is at $18 or $19, we're just scratching the surface, guys. Their acceleration is phenomenal. And when you look at their trend charts on their revenue and their customer growth, it just keeps going like this. I'll leave it there.
I would tend to agree. Matt, how about you? What do you think about this go-to-market strategy?
I think it's good. I think it's a good change from what I experienced 5-6 years ago when I was on board at a Foundry. That was one of the things that I was kind of scratching my head about. And it made sense to me, somebody that's very unfamiliar with data, how data kind of really works and how, recognizing how data truly is the center of everything now these days. And understanding at that point, I was just like, why can't they just build the things and just do it for us? And, I just was kind of couldn't wrap my head around it. Now I think the industry, all these different industries and data and people's acknowledgement of what's necessary for companies to do in this new digitalization age is moving way faster and has moved further than I could have ever really thought the past 4 to 5 years. And so these boot camps, I think, is appropriate for where people are today compared to where they may have been. So I think so many people have utilized things like, I'm sure, Salesforce, have utilized things like Snowflake and many of these other tools that are out there, and recognizing the shortcomings of some of those. And so being able to deploy something like a Foundry in a boot camp or an AIP in a boot camp, and be able to understand how they can interlink all their data, disparate data sets, and truly transform some of the processes from the ground up is way better. And I think if you have that hands-on experience, rather than the kind of every couple weeks, check-ins that we kind of had back at UDOC, 5-6 years ago, and trying to get everybody to kind of like mosey along in a lengthy period, I think this is much more useful. And I think people will be able to utilize the use cases much faster, realize how many crappy legacy systems. I can't tell you how many times I've been in a room trying to create legacy systems, and Palantir within a couple weeks is up and building a new legacy system that destroys the old one that we've had in place for months, if not years. So anyway, I think it's good. I welcome it. I don't think anybody should not welcome it. Faster is always better, right?
All right, let's get Vince, then we'll have Arnie because I know he wants to share something. Vince, AIP bootcamps, is this the future for Palantir?
Definitely. I actually had a question to Matt now when he was speaking, because he said that his experience would have been different. And I'm quite curious, how does he think, if, for example, we look at his undisclosed oil company, if they would have gone this AIP route, would it make the forward deploy engineers not needed or less needed, or how would it have changed how you guys adopted Palantir?
I still think it's necessary, right? Because you have to realize how many different pieces of data and all the relationships and the actual organization of that data is necessary before you can really move into an AIP functioning world. And so it's kind of garbage in, garbage out. If you don't really give AIP the right guardrails or give it the right data to work off of and have the right structure of data, then it's going to be like ChatGPT that we were using a year and a half ago, right? It's not going to give you much really good stuff to kind of feed out. But now that if you have an opportunity to organize, it's going to take some time. And so I think that it's a stepping stone. What I think is good about these boot camps is that it gets the foot in the door. And generally speaking, from what I've seen, people, and I'll hand it back to you because I don't want to make everyone. I want to give everyone a chance to talk about this. The things that I've seen is it might lower the initial entry cost and run rate of a company being in the door to $1 million, $2 million versus these larger contracts that I was involved in, which is, one of the top 20 contracts that UDOC has, that Palantir has. And so the thought process to me is they're trying to get as many people through the door, increase net dollar retention, increase all these opportunities, so that way they can really focus on unleashing into the modern enterprise. Versus in the past, they were trying to knock out, let's just say, the equivalent of, they're trying to knock down elephants, get $40-50 million contracts, which is a lot more difficult. So I think if you allow it to get as much aerial exposure, kind of like the Amazon model, as you can, and kind of now you're at the place of profitability, you have the opportunity to kind of give this away for free, kind of, and get as many people through the door, it'll eventually grow like a weed, and net dollar retention will eventually catch up.
I want to chime in there before we go to Vince and Arnie, just really quick. If you picked up on the call, though, Carp explicitly said the only thing holding us back, and we got to be very
it's a good one.
Is
a good point. Yep.
How many people do we have available to ramp this up effectively, knowing the product well enough? Basically, how many forward engineers do we have that can do this effectively? We know that as of September 30th, if you guys saw the 10K, or I'm sorry, the 10Q was posted this afternoon. They have 3,800 employees. 3,800.
They disclosed that on the shareholder letter too. They explicitly said how many employees they had. Yep.
And so, if you pay attention to the revenue growth, this is purposely being done of not trying to outgrow too fast to where they can't handle the volume. And I think it's very important for every shareholder to understand that if you are a long-term shareholder, you want them to do that, because you don't want them growing 40 or 50% over a year, and then the quality of the service, the outcomes, and everything else degrades to where customers don't get to that scale phase. So they're methodically choosing how to kind of level this out with these boot camps. And so I think they're going to get to a point where either they got to figure out a better way to get more engineers educated or partners educated, or they're going to keep just methodically growing at 15, 20%, which is okay, as long as they can keep doing it, and they're making sure to do it profitably now. So just wanted to get that point in there.
Yep. Arnie, your thoughts on these boot camps?
You know, what's really fascinating is that when you sometimes change a little detail, everything after that can change. And the impression I had was, imagine you're a Mr. Beast level kind of content creator. You know that your product, your videos are 10 out of 10, if not even better. Yet, if you do a crap thumbnail, you will not get discovered. So your entire potential can't be expressed. And it's a stupid detail, like it's a thumbnail, okay? A small, tiny picture that connects your power to the visibility. And with bootcamps, I feel they solve this huge problem they had. And let me say that I'm very proud of the conversation we had few Palantir weekly ago, where I remember explicitly asking you, Tom, but what about the cost of these bootcamps? Because my impression is, okay, we like running a 3 days, 5 days bootcamp is yes, a lot of work to organize, but at the end of the day, it seems way less costful than running a pilot. And they mentioned that in the earnings call, that a great part of the margin expansions that we had, and I think that was the very big surprise. Like in terms of revenues, the incremental was just in line with the guidance. So happy with the bump, but it was more or less with the guidance. Where truly we had the switch was we were expecting like 25% margin. We got 30% EBIT margin. And that partly comes from bootcamps being an extremely, not only smart, but super cost-effective way to basically connect in one day 10, 20 customers for 3-5 days, and not 6 months pilot, each of which needed to be organized. So imagine also from their standpoint, the complexity to manage that. Further implication about bootcamps that I think we haven't touched yet, but has a very profound implication is Palantir is not a sales-driven company, as we mentioned, but bootcamps make it clear that you don't really need a huge sales force to actually manage this business, because in this case, with very strong forward deployment engineers, they can transfer the knowledge they have on the platform, and they automatically become salespeople. So this is not something that leverages the strength of Palantir, but we know that is a very engineering-focused company and not a sales-driven company like some thin products that drop from the sky. But it is a unique differentiator that makes these other companies like Snowflake make it almost impossible actually to replicate. And the reason is simple. The friction between salespeople and the engineers is there. And you have companies like Palantir, almost all engineers with few salespeople, and companies like Snowflake, which are the opposite. You have a horde of Salesforce. And salespeople can't really run bootcamps because they're not engineers. They can't really solve the problem directly with the customer. They are there to sell the product. So imagine if Snowflake right now wakes up and, oh, we now do bootcamps as well. Imagine the internal frictions they would have. That would be a nightmare. Like Palantir already had friction between the salespeople and the engineers. So what's fascinating is not only that what Palantir is doing is working, but actually is not easy to replicate, both from a product standpoint, because as Karp said, in order to do this and to give any kind of software for free, you need to be 130% that works, and the client would be so happy to stay with you. And the second implication is you can do that only when you have very strong engineers that they can learn the product and they become top engineers, also sales, which helps not only the business, but also set a strong barrier to entry. And the last point I would like to underscore, to not take it too long, is this comment from Chad from Palantir, that makes us understand, and that was mentioned also in the earnings call, that right now we are thinking more from the point of view of Palantir selling the product, clients interacting with the product. But we have not really paying attention to what are the implications also for Palantir themselves. And this comment helps us understand it. Amit made a brilliant long post here explaining that, okay, there are no excuses so far apart from your laziness from not understanding Palantir. And I commented, okay, there is no shortcut to understand Palantir. Maybe following us and participating to these weekly events, daily videos, like there is knowledge. Something may be right, something may be wrong, but there is knowledge that is built. And Chad, from working from Palantir, wrote, working on it to make it easier for you and everyone.
This goes to your point, Dom, that they are stalking us on Twitter. I mean, this is a forward deployed architect basically responding to us on Twitter. And Arnie, go ahead. You could read what he said.
And then he mentioned bootcamps. They are great at shortening cycles of learning of our customers, but also our learning on how to make the platform even more powerful and understandable. The momentum of the flywheel effect is wild. So it's not only a sales motion machine, but it's also a product development machine and a marketing machine, because this way customers enter in contact with the platform directly, and Palantir is forced to make it extremely easy and dumb version to be digested immediately in 1-3 days. So I'm super excited about these developments, not only for the developments themselves, but also for their second, third order consequences that I think are the ones I try to underscore right now.
Yeah, that was really cool to see that forward deployed architect actually respond to us. Dom, let me ask you one question and then we'll move on from this. Do you think a Snowflakes or a Databricks could replicate this bootcamp type of model? And if they could, why haven't they yet? My assumption is that Palantir actually helping companies build a product on their own data is a unique thing that maybe some of these other software companies haven't done before.
Products just aren't good enough. You have to have an outstanding product that can show quantifiable, proven ROI, right? Give me 3 days, I will save you X amount of dollars on your problem. The ontology is what unlocks all of that.
Yeah.
It always has been. It always will be. That took many years to develop. And so Databricks has great streaming features and great data warehouse capabilities in certain pieces of Palantir, and it works great in tandem with Palantir. And same for Snowflake with data warehousing, etc. But when it comes to modeling your entire business and allowing everything to be quote unquote ontologized into a logic that anyone understands the objects in your environment, and then you can make real-time decisions, neither one of those companies can do that. They didn't design their company to do that.
That's what I thought. Yeah, because I mean, there was some discussion on why, is the sales process unique, and it feels like it's unique because
so here's the deal, and I was going to make shirts too. I thought about like doing the whole e-commerce thing. I was like, maybe I could do a little side hustle. I really, and it's kind of tough too because I still work in SaaS, so I got to be careful what I say. But proof instead of proof of concept, bar none, best thing ever. Like it literally sums it up on what they're doing. Proof over proof of concept. Every other company gives a proof of concept with what if, shoulda, coulda, use our test environment. They're saying no. Let's bring your real world problems, your data. Let's do it, and we'll show you value right on the spot. And that's what Carp's been saying the whole time. Like, hey, you should be able to prove out your product in real time if it's that good.
Yeah, I would agree. All right, let's go through some of the numbers real quick. I just want to run through a couple of them, and then anyone who has any thoughts on these numbers, whichever one stuck out the most from this deck, we can talk about. Customer count, 34% year over year. Commercial customer count, 45%. That was reaccelerating. Regular customer count stayed flat. 80 deals of $1 million, 29 of 5 million, 12 of 10 million. Last 2 quarters, this number was 64 and 66. So we got a nice little big jump there. As Vince mentioned, one home construction builder, $40 million in just Q3, which was awesome to see. 3.3 billion in cash, so no buybacks. We added 200 million to our cash reserves. I think that generated like 40 million in just net interest income. So that's not too bad either. Obviously, GAAP profitable, so we are now eligible for the S&P 500. TTM per revenue went up a little bit, or I think it was 54, 56 million last quarter. So it's either flat or up a little bit. Government revenue growth up 12%. Commercial revenue growth up 23%. U.S. commercial up 33% year over year. David Glazer, on the CFO of the last call, said U.S. commercial is what we should really focus on in terms of what's going to generate GAAP profitability. And it seems like this whole idea that they have a lot of demand seems to be correct. And then one other number that I wanted to talk about was the operating income. It was 17% in 2022 Q3. I'm just going to get that slide right here. And this quarter, it was 29. Yeah, this one right here, 29%. So it's the highest it's been in a year. And Q3 2022 was when Carp said we wouldn't be profitable till 2025. It was one of those quarters where you had a lot of people just really upset at the company. They figured out how to get that number up a lot higher. So anyone can start, but which of these numbers out of the entire deck kind of stood out to you and that you would want to focus on a little bit?
Let me say, there was one number that I think stuck me the most, which is one you didn't mention, related to the US commercial growth. Is not only the fact that once you exclude the SPACs, which we know are basically dragging the results, so around that 30% growth from commercial, almost 40% growth from commercial actually comes out considering the drag that SPACs gave. Basically, rather than growing, they are decreasing, creating this friction in the numbers. By excluding them, by excluding the SPACs, US commercial grew 55% year on year. And now the basis starts to get quite interesting because we are around, let me tell me if I'm wrong, but around more than 200, almost 300 run rate. And they want to reach 1 billion by 2025. The number that struck me the most is that combined with what they said just afterwards, growing at a quarter-on-quarter growth of 19%. Quarter-on-quarter growth of 19% means that the annualized growth is almost 80%. So this thing is not only growing fast, but is actually accelerating. That is where the big magic is there. We discussed also in the last stream that the only negative number of the earnings were the net dollar retention, which was quite disappointing because 107% means that the existing customers just expanded a little bit, 7%. And considering the historical average of more than 120, it was already low at 110, 107 was quite a meh. But we know that
There's a reason for that.
From Europe. I guess it is related to Credit Suisse dropping because they got bought by UBS and since UBS doesn't want to operate on Palantir, that could have affected the results there. On the government side, they said we are growing 10%, but basically we expect things should be better. I would say weird that actually ServiceNow had a very strong quarter, especially on the federated agencies. So that is a low red flag that needs to be investigated going forward. But the very, 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 very positive sign is that if they grew 17% overall in revenues with such a low net dollar retention, it means that the new clients contributed for 10% of that growth. That number compares with 2-3% of the last quarters. So it's not only bootcamps make the business super efficient, but it is also true that they help generating more revenues faster. More revenue faster means that imagine all the scale process that we like to see from Palantir, the acquire, expand, scale phase, all of that becomes way faster, which implicitly means if we just get many customers now, the strong growth that should have happened after 2-3 years normally, now it should happen even faster because the customer is already used to use the product, started immediately from touching the product. So there are a lot of side effects on that. So
to your point, the deal count grew 2.4x year over year, which is tremendous. Also, the total contract value was $252 million for U.S. commercial. These are your smaller customers typically, up 55% year over year, which means they're getting bigger customer acquisitions. So everything you said, Arnie, was spot on. You're going to see that lower net retention. And Lunar said it earlier, Europe is just behind. If you look at, and I'll post like what the historics are on Europe, it just keeps going lower and lower and lower. Obviously, there's also a lot of pushback on this NHS thing. I think they'll still get that deal. But in general, that culture is definitely really overprotective on their data. And they kind of prefer to have their technology in-house. We know that U.S. technology companies do the best. And Palantir, in my opinion, is the best. They're growing the U.S. business at 62% year over year.
I think so agree with both of those statements. I think the thing that I look at most, kind of looking forward and seeing how much potential this company has to generate income, is not currently viewed by the retail community. And what I mean by that is I think everyone saw, and Amit mentioned this and showed the slide, the jump going from 17% operating margin to the 29%. But you think the target would be, right, the 82% gross profit margin that we kind of see. But we're not going to get there, right? But if you think about this, and Arnie has a really good slide on this that he created about basically how Palantir is able to keep their operating expenditures very flat comparatively to their revenue continuing to grow. And so just looking through the presentation, you're seeing operating expenses stay relatively flat at about 1.5 to 1.6 billion. So we're getting to a point now where we're truly starting to see that gross margin stay flat at the 82%, but that operating margin, I think, can get anywhere to 50 to 60% in the longer term. Now, it's not going to get there tomorrow, right? But if you think about how quickly this company is starting to get to the $2.6 billion mark next year, the over $3 billion mark the year after, we're at $500 million in trailing 12-month ops cash generated for the business. In just 2 to 3 years, we're going to be at $1.5 billion. And if you start to think about how we're going to continue to grow at, say, 15 to 20% per year, this thing's going to be generating $2 billion worth of cash in very quick order. We're talking about in the next 5 years. And that's all just based off if they're able to keep that basically that operating expenditures to a pretty low amount. And so if we are able to get to the 40, 50, 60% ops margin, which I think is very possible within the next couple of years, this thing is going to churn out a lot of money. And every dollar additional that you get in revenue isn't just going to be generating 29% directly to the free cash flow statement. it's going to be generating, 40, 50%. And that's where I think we'll truly get to the premier valuations and get to the $150 billion sort of market cap within the next 7-8 years or so, is really once we get to that point. Now, that's what I'm keeping an eye on, because that's, to me, what's going to drive the bottom line. That is what's truly going to show people that, oh shit, this company is generating $2 billion in cash flow from operations. Multiply that by 30x. That's where you get the $60 billion valuations. Then you get the $3 billion in cash flow from ops. Multiply that by 30x. That's where you're getting. And those numbers aren't too far away, right? Like that, if they continue to deliver at the 17, 18, 20% year over year revenue growth, that'll happen very quickly, especially if they're able to keep their expenses rather flat.
I was going to say, why do you think they're keeping these expenses flat? Whether Arnie, Matt, you can answer this, because that's really helping them, right? A lot. Why is everyone laughing in the chat? Dom, why are you saying LMAO? What's going on?
So dude said Dominic's just sifting through, filtering our bull crap to get to Lunar's comments, and I was just like, Lunar spits truth, man. I swear. Like, I just want to get that guy on a Twitter or a Zoom or something, just pick his brain.
There's like two chats. There's one is like the degenerate chats. The other chat is like
they're talking about Vegas. I'm like, Lunar, what else do you want to talk about? Let's keep it going.
Oh my god.
Yeah, no. Did anybody read the 10Q today?
I didn't. But maybe you can help answer the
thing.
It's not out for me. I just checked their website and it's not.
Don't go to the website. Go to Edgar. Go to the SEC website.
Who's Edgar?
Come on, Amit. ED.
I thought you guys would laugh, bro. I thought it would be funny.
Edgar SEC filing.
Yeah, I know what Edgar is.
Okay, I just want to make sure you got to keep your credibility.
No, I know it.
Yeah, so it posted today, and I went through that whole thing, combed through. It was the first time I combed through, like, very, very detailed with Speechify, really cool app that reads everything to you. They signed an agreement or amended their cloud agreement with they wouldn't specify, but one of the third-party cloud provider hosting services they use to spend an additional $1.95 billion, call it $2 billion over the next 10 years. So they amended to have a 10-year contract. Now, what does that tell you? That tells you that they're very confident in the AIP model, because the AIP model actually uses third-party cloud hosting. They don't use the Palantir cloud. That's for their production customers who actually are signed on. But that's a good indicator that they're confident in who they have in that provider. Their commitment. Go ahead.
Could you repeat a little bit, please? What's the difference between Palantir Cloud and using another service?
Yeah. So Palantir Cloud is what, and Lunar, correct me if I'm wrong, but I read in the 10Q too. It's their own data center, right? So in production, you're going to run your information typically either on-prem in your own environment, or you're going to run it in their data center. So their hosted infrastructure. They have hosted infrastructure for their APJ customers for Japan. So, they bought out that facility earlier in the year. So they have a center there, I would assume. And then they keep adding, to their data centers that are Palantir own data centers. But then they have the third party hosting like AWS, Azure, GCP for AIP and for basically for testing, right? So they upped that significantly. Their commitment for this year in spending, so you can keep track of it in the 10Qs, is $154 million for this year in cloud spend. And then one of the other things they called out in the 10Q was they do have an RPO of, call it $988 million, and when you round up, of non-cancelable deferred revenue, and will be recognized. 57% of that will be recognized within the next 12 months. So they already have a nice fat chunk of revenue that will be recognized. That's already can't be canceled. It's deals won. And then after that, 35% of that 988 million will be spent and recognized in the next 13 to 36 months. So they got some nice, that's why I want shareholders to understand they're not going to try to outgrow their capacity and their engineering. So don't think that we may see 30% year-over-year growth like immediately next quarter or the quarter after. Like, I expect the company to probably run between a 15 to 20, 25 at the highest growth rate for the next like 4 or 5 quarters, because they're really focused on staying disciplined on that acquire, expand, scale business model, because it works for them and it allows them to use all the different use cases and continue to grow with the customers so they can keep ramping up forward deployed engineers. That's just my speculation.
But I have a question. If the net dollar retention was 107% this quarter, and let's say that it normalizes to 115%, and they keep growing from AIP, wouldn't it be logical that the growth goes back up to 25, 30, and maybe even above 30%? Because just
if they get people to go from acquire to scale, yes, and that could be. I just don't want to set false expectations that people think that they're going to just like immediately get there. They could see a lot of those customers, though, to your point, Vince, go from that middle of the road where they're losing money to then just be like, this it was a really big call out. What you said earlier was a company spent $40 million in an in-month POC and then said, screw this, let's just do it. This is great. We might see that inflection point at some point. We all expect that will be the aha moment.
I'm really curious on the AIP customers, because we had this before AIP or the boot camps. It was like customers were like having a free pilot, and then they were slowly scaling. Like the graph was like this. And I'm very curious if on the boot camp it's like you have 1 week of free delivery, and then then you have a big contract. And then does it flatten out because they are more to smaller companies, and like they're not trying to slay the elephants, as Matt said? And is it now that they get a huge contract and then it flattens out, or is it that
I don't think it's a huge contract? Because if you look at the deal, I was looking at their historicals. They started actually, it's interesting how they pick and choose certain metrics to start mentioning in their earnings. It wasn't until Q3 of 2022 that they started doing 1 million plus deals in their earnings presentations. It used to only be 5 million and 10 million. So they had 78 in Q3, 55 the next quarter, 64, 66, and then just 80 now. So I think that $1 million run rate businesses, to your point, it's kind of getting them solving a problem or maybe 2-3 problems with AIP and the use cases. And then once you get those $5-10 million contracts, I think that's that scale phase.
Yeah, because that's where I think that the growth can really come from, is that these AIP, because if they're using less forward deploy engineers, that's also why I think their margin went up. Then again, it goes back to this, that the growth can be faster than what we're expecting, because they don't need necessarily so much personnel to keep growing the new AIP contracts. And again, if we just go from this quarter, that if the net dollar retention adds another 7%, then we would be just there. We would be growing, 23%. And if the AIP keeps going, because the AIP is ramping up, like they're doing more AIP boot camps this quarter than they have ever done. Which, if it's going like the way it was going, I do believe we will see plus 30% growth. That's my
I think we'll see it. I just don't want to promise anyone of an expectation of when it'll be, but it could be sooner than later. And then also too, let's switch gears and talk about the government business. People are sleeping on it, but I can't tell you enough, coming from this world and being in it for over 20 years. This FedStart business that they created is game changing. I have so many friends at different companies. I'm like, dude, you gotta show this to your team, your product management team. The ability to take what typically they're very conservative on the slide. They say 18 months and up to $2 million for accreditation for FedRAMP to be able to sell to the federal government. It's really more like 18 months to 36. They're doing it in a containerized environment. Lunar saying, yeah, me and Coach Shop had a long conversation about this. They're doing this in Kubernetes and delivering it in 6 weeks. the time to value you to go to a product management team and say, I can help your company sell to the government and be FedRAMP certified IL5 in 6 weeks. They already got 9 customers, enterprises, just within weeks. And then you mix that with the other piece that is really interesting is the whole portfolio of their government services called Palantir Government Web Services. So with how crazy the world is, I think eventually, and it's interesting because they did just get a new Israel bill passed. I don't know if it passed the Senate yet, but it was 14.5 billion. I wonder, we know they're working with Israel. I wonder if Palantir sees any of that. But in general, I think we're going to see more from the government than what we've expected, because unfortunately, I think our world is not going to simmer down anytime soon.
I would like to ask you a question, since I mentioned it before, and I think this is something, the negative side of the earnings report I mentioned previously. These are some quotes from the results of ServiceNow that I shared before the earnings release. And ServiceNow was actually very, very positive on the government side. So positive that actually they reported its best US federal quarter with a 75% year-on-year net new annual contract value and stronger retention. And again, ServiceNow closed 3 federal deals over 10 million. The US Air Force contributed with the 3rd largest deal in company's history. And then again, this was backed by the crazy interest ServiceNow is seeing from the government related to AI. So what I struggle to understand so far is why, therefore, the results of Palantir on the government side, even only US government side, were so relatively weak. Because the government grew 12%, but the international grew 15%, backed by healthcare and defense, they said. But the US one was just a 10% growth. And I struggle to match what we have seen, so this 10% growth, with what ServiceNow experienced. Do you think is there the competition that Cathy Wood mentioned last year, or I'm missing something?
I can answer that, but I'll let you guys talk first. I've been doing a lot of talking.
So the question is basically, go ahead, Vince, you got it.
Yeah, I think the government is really the only place where we have been blue-balled as Palantir investors, because we, there's all these things that keeps happening in the world, and we're like, yes, God, it just seems like it never comes, And I was thinking about the same thing as you, Arne, and I was thinking, what if the top 20 customers is all these government defense units? And then basically the way that we would see Ukraine or Israel in these numbers is that those top 20 customers keep growing, because it's like if Palantir is already in the government, it doesn't make sense that they would get new customers or new contracts. It's more like the CIA goes, okay, we're using you guys here. Can we add this to the contract? And that's my conspiracy theory on it.
I just think international government growth has been not the best, along with international commercial growth. And Carps acknowledged, like, across the pond, we're having some issues with like getting them to, I mean, literally, right? He said France, we're banned in Germany and France is trying to spend 40 million to build their own competitor to Gotham, which is probably not going to be effective. But like, I think we're entering a very hostile time where not only the GDPR stuff is going on, but like these countries really are afraid of data being stolen. And so US government seems like it's doing fine, right? Could it be better? Sure. But I mean, we got a $250 million contract, $60 million. Like, we've gotten a lot of contracts over the past couple of months. I think international is where we're not performing, and that's why government's slowing down a lot more.
I wouldn't say that. I would say international is not performing in 2 places, France and UK. And in France, it used to actually be a side. Here, I can actually share. Can I share my screen?
Yeah, you can. I'll approve it for myself. We'll get to the super chats in a second. I see a bunch of them after we just finish this. We'll get to this. This one's funny though. Is Arnie wearing his?
Well, meanwhile, let me say that the Carp words were actually very harsh towards France and Germany France, he said, France wants to build a foundry, Gotham, or I don't remember which one of the two, in no time with 40 million. You can't do that with 40 million. You can't do that with neither 1 billion. So good luck with that. Basically, is we wait, you fail. And a similar answer was related to Germany, where basically Germany is making attempts to stop the spread of Palantir in the region. They were very well settled in Northfalia, Westphalia, and another region. And there, Karp said, okay, so what do you want to wait? Basically, a terrorist attack to happen to wake up and, okay, we need this stuff.
Yeah. I mean, he definitely was antagonistic, and I don't blame him, because at the end of the day, they're saying his software isn't as good as what it is, and they're going to go on their own. You can see France here in Q3 of 2020 actually was 23 million of ARR, and it got its own line item in the 10Q, and it kept dissipating all the way to 0 or less than enough to have its own mark. The UK has always been like 10, 12, 13%, and now back down to the 10, 12, 11%. But what's interesting is if you look at the rest of the world revenue, that continues to grow. So here, Q3 2020, we're at 74 million. If we go all the way down here to Q2, I haven't put in this past quarters, we're double that. So we are seeing more triculation from Japan and Sampo Holdings and other places, Hyundai, that are seeing value in this. I love the question on the call that they talked about. Would you be able to help other countries that are Western allies in Asia? I think they were hinting at Taiwan and what, China may be trying to do. They will support that. And they've been very clear in all their 10Qs that they haven't seen a lot of revenue from Ukraine and Israel yet, and they don't anticipate that till the rebuilding phase. They're just doing the right thing as a humanitarian company. And I loved his comments about Israel on the call as well. But yeah, when you look at this is my spreadsheet I'm working on. They are growing. They're still in Q2. It was 57%. And even this past quarter, 55% was still government overall. 45% was commercial. They're growing rapidly. Eventually, you'll see commercial overtake. But with these new services and with the world getting as complex as it is, you may actually see a 50-50 split for quite some time. But overall, all of their numbers are just, the growth that they've shown has just been great, from profitability to reduction of SBC, which no one's even talking about their SBC anymore, but they've been habitually reducing it, effectively. Not too much, because you got to keep your top talent, right? That's the only thing that they can reward, because they want to keep that cash on hand in that bank with no debt in case anything happens. And so they're being very, very fiscally responsible in how they're running the business, which has made me very, very pleased. And to your point on ServiceNow, I looked at what their contribution was on federal, and this would be my answer to your question. ServiceNow closed 19 federal deals in Q3 with an average contract value of a little over $1 million. And then they had 3 deals over 10 million. So we know that Palantir did over 300 million this past quarter with federal government. And their deal sizes are much larger. So I would anticipate a lot of their deals are still hung up based on us having a bigger budget approved for the government. And we're currently kind of facing a potential shutdown here coming in a few weeks. So I think that's why we haven't seen the big explosion there, as ServiceNow had their best federal quarter in a while. But I think just the size of deals that they have are just so much bigger.
So the bigger, the more time is actually needed, the more process.
Yep.
It's complicated.
And also remember too that they ratify their revenue. So when you look through the 10Q, they constantly talk about how they have big deals, but then they ratify them over the long term of the contract. So we may see a big influx from that RPO come from the government side. It could be Q1, Q2, whenever.
Let me touch something that you just mentioned that I think is worth underscoring and is maybe the issue that many people still have related to Palantir. The stock-based compensation basically was flat, and that is already a remarkable achievement. But as the business actually grew, the impact of this stock-based compensation kept decreasing, and so far, basically almost reached the level of ServiceNow, which was the top player among the other guys. There was a very nice chart that I made months ago showing that basically while you have Snowflake, Datadog having the impact of SBC flat or even growing as they grow, the impact of SBC from Palantir keeps decreasing very fast. We went from basically 70% of revenue to just around 20, which is close to the gold standard that I think is ServiceNow. So far, ServiceNow is the best run software company with around 25-30% growth combined with 30% margin. So that's why I keep insisting with that, because even if the product can be simpler, they're not really comparable on the product side. On the financial side, that is the gold standard that Palantir wants to achieve. And the third point is on the number of shares. A critic that I saw on Twitter is, oh yes, but easy, you are diluting 10% more. And it could be hard to combine this information that we just mentioned of SBC staying flat with the impact going lower, and we have this 10% bump in the number of shares. So I would like to put a little spotlight on that. The number of shares is divided by 2, meaning that you have the existing shares outstanding that didn't change much. They just increased with a regular restricted stock units adding from employees, and the diluted number of shares. This is the number that worried some people because it increased by 10%. And it's not that the Palantir woke up and, okay, now we dilute the shareholders. But that is a natural consequence coming from the stock price rising. The reason is, once you have options and management has quite a bunch of options, and they become they can be executed. Accessible is the word. They can be executed. These options basically start magically contribute to the number of shares diluted. So they don't impact the number of shares outstanding until these options are executed. But this diluted number of shares, implies that all the options that can be executed in that moment enter in the number of shares. So paradoxically, right now, if the stock keeps mooning, we would see this number of shares increasing. So this is something that we should remember. As
and
we
so
should
you guys
also
know,
remember,
in the 10Q, they highlighted that there are a lot of shares that executives have to sell or lose this coming year. So you may hear, more FUD. Hey, then
hopefully,
I was gonna say the more FUD you'll hear in the retail and institutional community because they don't understand the technology. We can see it retrace back because of that. Because there are a lot, if you dig into it, there are a lot of shares that have to be exercised. Hey, I'm okay with getting a lower cost basis because it's not like they're choosing to sell these. If I had a gun to your head, Arnie, and I said, hey, you either sell these 10 million shares now or you lose them, you're going to sell them and get that profit, right? It's just human nature. Like, why wouldn't you? So, be ready for that. There's a lot if you dig in there.
As we also need to be prepared to what it was mentioned a few earnings call, and actually didn't happen yet, that they underscored that at the end of the year, they expected the stock-based compensation to increase. So since Q3 was kind of flat, so still $114 million per quarter, they remarked again, okay, at the end of the quarter, we will see an increase of stock-based compensation. And again, this is something we discussed previously, that is paradoxically a positive sign. And it is a positive sign because right now, stock-based compensation is linked to the success of AAP. So it's not only, okay, you come work for me and I pay you well. Palantir last earnings call mentioned the success of AAP determines is linked to the level of SBC. So the fact that they now expect SBC to increase seems to be very linked to the fact that AAP is working. And as Emir mentioned almost a few months ago, paradoxically, looking at the SBC trend, if there is this link, could be a leading indicator of actually how well the company is performing.
Okay. This is really good analysis. I think the big analysis here is why their costs are flat, which is increasing their operating income, but also in the context of share dilution, how it's going to play out over the next 7 years. One thing I think we might have mentioned or might not have, that average revenue per employee, right? That went up to 588,000, that doubled from 299. Any thoughts on that? We've been talking about Databricks, Snowflake acquiring all these companies, Palantir just paying their employees to kind of make those products. Do you think that also adds to the moat around their talent pool that they're using?
Yeah, I mean, I still think, twofold. A lot of people still don't know who Palantir is, even in the tech community, as well as the customer community, investor community. So you have to keep that tribal knowledge, those people that have helped build stuff, because they're super valuable. That's why the SBC still hasn't really gotten down below 20% or whatever it may be. But I think we will see, to Matt's point earlier, we will see an inflection point at some point in the next, 2, 3, maybe 4 years, where I believe they will be paying more on money than stock-based compensation and driving their gross margins even higher. And right now they don't pay a lot for their salespeople and others. Their forward deployed engineers make the most. But to your question, Amit, they have to keep those people, and they have to get more people trained up on it. Like what the next thing I'd like to hear about is what's the success of their partner program with IBM, Carahsoft, Accenture, Deloitte. Like they have all these programs. So I would like to hear how much Palantir are they selling through the Azure Marketplace, GCP, AWS. Like these are things that's like that next evolution of software companies and what they're trying to do. CrowdStrike just crossed $1 billion in the AWS Marketplace, right? And there's other companies doing that. So,
sorry, Dom, wouldn't we at this point expect some more hints that the partner programs are actually working? And I'm thinking about that.
If I had to say there's like a big disappointment, that would probably be one of them. By now, I would have thought. We never heard anything from the Data Robot partnership. We never heard of,
Also, in terms of customer count, I don't know how they would really count as a customers if I get one contract coming from, let's say, Accenture. So on that side, there is something that is not truly clear to me. I would expected to have some bigger boost, or maybe it is just normal. They are all on the pilot phase because they're stuck to the old paradigm of the 6-month pilot.
Yeah, I don't know. I do know one thing. I really hope they bring back this Q4 for the end of year annual 10K is, remember how they used to break down their revenue based off of acquire, expand, and scale? That really gave investors a pulse of where they were in their business maturity.
Yep.
And I just wonder, why do you not do that? What are you hiding? Why are we not seeing that? Because I think that was the best thing for long-term investors to see where their customers were lying. I did find it interesting that in today's in the earnings transcript, they focused on the fact that out of their big deals, out of the $1 million bucket of 80 deals, 30 industries were impacted. So they were very keen to mention the industries. And then the same thing for their big 10 million, it was 16 industries. And then for the other one, it was 11 industries. So they're definitely trying to figure out to tackle the problems that are implicative of actual industries at whole. And you've seen that because they look at all the energy companies that they've now consumed under their portfolio. It almost forces people, like in the airlines, when they did Airbus and Skywise, it's like, you know, that's another thing, Arnie. We haven't heard much about the app marketplace that they have, right? Like,
But
Yeah.
that may
building
be
stuff.
just early. The marketplace app is just early. They just made the website, so I think it would start having an impact in 2024. So, but yes, it would have been nice to actually have some hints. Okay, this makes sense. And also, remember that 1 year ago, they started pushing the idea of we also have a usage-based pricing. Now we know that that is connected to FedStart, and Apollo are use-based. So this is what we know. The marketplace would eventually be kind of use-based, because if you get a percentage or something like that, that would be implicitly usage-based. Yet they don't really talk about that any longer. Like, they made one dedicated slide and then poof, never mentioned again.
Yeah, and they keep things close to the vest. So, I mean, I get that. And you know, they'll divulge when they're ready. But if you're listening, Palantir employees, let Carp know I really like that slide with acquire, expand, and scale, because it gives a good pulse for an investor.
Let me say
I
that
missed the
now-
cohorts one also, where they broke
Yeah.
down
Yes,
the different
yes,
cohorts. But
yeah.
I missed the cohort one. I missed both, but the acquire expand phase. Now it could be weird to have for the simple reason that
Everyone's in acquire phase.
well, no, because previously the acquire phase meant you are in a pilot, you cost us, and you don't generate any revenue. But right now, if you can start generating revenues from a module, it is very different from the old paradigm Palantir had. So that slide basically only works when you have one $5-10 million product and all the clients operate under the same rule. But once you start having pilots like, okay, in 3 months, in 3 days, you go home and you bring me $1 million contract, that already is out of the acquire phase. So I think that is an implication not only of Palantir wanted to hide, but also the evolution of the business model. On the core side, they have no excuse, in my opinion. They're hiding.
Yeah, I was gonna say maybe it's the same thing that happened with the cohorts, that they started to do a lot of pilots, and then, you know, like some of them didn't pan out, or a lot of them didn't pan out. Like they went to smaller customers, and then let's say they were closing only 1/3 of the pilots, and then it would look like that they have, you know, these new customers, and then the next year they're the same or lower, you know.
I do have a question. I mean, I know they mentioned that they're going to do 70 boot camps in November alone. Did they mention anything about future AIP cons, future Foundry cons, or anything of the like in the call? I didn't hear anything.
I didn't hear any of a new one, but I mean, they've been averaging every 6 months at least 2 AIP cons. So I would definitely think that they're going to have, and 2, the people that they had presented the last one were from previous boot camps. So,
sorry guys, orthogonal thought. Isn't it fascinating that the bootcamps are nothing else than a spin-off of VIPCon? Because VIPCon were basically presentation and then a little bit of work with the clients directly. So maybe they realized that people were not so interested in the presentation phase, but where they truly enjoyed was the experience afterward. So maybe they thought, wait a second, what if we make an event just focus on this and we replicate it n times? Because AAP is not scalable, it's a big event to organize. Bootcamps are, okay, let's get a location, 20 places, bring your own computer.
I think you're right.
I think it's foundational, right? Because what I experienced was you have a bunch of outsiders coming into an organization trying to say, now this is how we're going to do things. What are your problems? How are we solving them? You know, and you're just sitting there based off of, let's just say your company's 50 to 60 year history of this is how things have always been done, right? So you have all these processes that have been built up over, literally decades of technology kind of changing throughout time. So you have all these disparate data sets it's kind of there. The nice thing about these workshops and boot camps is they literally say, remove you from that environment. They're not coming to you. You're going to them. And they're saying, very straightforward. What are your problems? And then you can literally kind of like get out of your normal element where, because I'm sure plenty of you guys have been there where you need to take a step away for a month or a week or whatever for vacation. And as soon as you're like in the middle of vacation, you're not even thinking about work, but you're like, oh shit, like, how did I not think about this? Right? Like in Vegas, I had a couple of these moments sitting with Tevis where I was just like, how did I not think about something like that? You have to remove yourself from a normal environment because you're used to the day-to-day grind. And so being able to put somebody in these chairs and have these boot camps to say, remove everything else. Like nobody else that you work with is here, right? No, your boss isn't here. This person's not here. Like focus on you and me. What is your problem? Like what are you trying to solve? And what is the most complex thing that you do on a day-to-day basis? What's the data you need? And so you're instead of doing all these things the way that, let's just say, Eaton used to do them, or Exxon used to do them, or Kinder Morgan used to do them, you're saying the data is coming to you. If you were to start fresh from day one, what would you build and go, right? What are you trying to solve? And so instead of having all these other people barking at you, this is how it's done, this is what we want to do, these are their old processes, these are the legacy systems that we use, you're literally saying, what's the data that's coming in, and let the data decide how you operate, because that's what's truly most important. That's the 21st century way to be thinking about these problems rather than these. I mean, you have to think how much data we're getting every day comparatively to what we were 10, even 20 years ago is magnitudes different. The Internet of Things, everything now has a sensor on it. You didn't even used to be able to say, a company name and turn the lights on and off in your house 10 years ago. And now it's like something that everybody has, these Ring doorbells that everybody has. So all this data is coming in. It's a completely different environment than when all these legacy processes and historic companies have been opened up. And now you're dealing with these companies that are hundreds of years old that have been doing these things the way that they have been. You just need to say, stop, I get it. You're a great company. You have great processes, but imagine if you were to refocus and re-energize the way that you guys do business, if you actually worked as a digital company and actually use the data at hand and organize it in an appropriate manner versus having all these disparate data sets everywhere. And I think that that's truly what's making the difference is that it allows you not to do this us and them that I kind of saw when we were starting up 6-7 years ago or whatever it was. And it allows you to kind of come into their environment and let them help you, guide you to what's the simplest 0 to 1 strategy rather than all these other people barking at you, wanting to get in your ear about what we want to influence Palantir to do. It's like, no, Palantir knows what they need to do. You're just helping them understand where exactly you need to go instead of all these other people barking in your ear. Anyway, I know I'm jumping around
to your
there.
Point, Matt, we're seeing a consolidation in the software market of your company has to truly prove value. No longer will be the day 2-3 years from now where you can just have a one size fits all, cookie cutter approach to customers. Customers are getting smarter. AI is giving them the tools they need to have the expectation at the C-suite and say, how is this going to save me money? How is this going to make me beat the competition? Show me how I can double my orders in 6 months or reduce my costs with my logistics. So that expectation of your software actually having to show value, I think we'll continue to see, especially with the likes of AI like ChatGPT, et cetera, and Palantir, they've been ready for this.
I would put the highlight to something that Matt said that I think is very true and very brilliant in the ability to be there directly with someone of Palantir team, exposing yourself, so your problems. It's like the difference between when you are out with some friends and you would like to talk about something that is more annoying because it's more personal and you don't really want to talk about. But when you are in a group, it is very hard to do that. But if you are on a one-to-one conversation working by the lake, then the conversation starts to be real. And if you want to solve a problem, that conversation needs to be real without the frictions of, oh my God, I can't say that, because if I say that, I basically tell my management sucks. My management has done very wrong things. And the least thing you want to do as an employee, you can do that as an entrepreneur more, not fully, but you can do that. But as an employee, your first job is not losing the job. And by definition, you can trash on what others do, because by the moment you do that, they become your enemies and your career is basically done. So being in an intimate environment with potentially other peers that if they like you, maybe they can, oh, this guy is smart, rather than being scared of exposing the problems that you currently have. That dynamic, this is a social dynamic, but has very profound implications business-wise. So it's like, well, I saw that in the investment world, so detached from that. But once you have a committee and the management is a committee, and you think what they're doing in terms of portfolio allocation is just stupid, you can say, hey guys, you're doing a stupid decision, because those are the management. You are just an employee, so you need to take your month shot. And if this is the collective reasoning, and let me say, if companies are still legacy, they have these software problems, is because they didn't want to really solve these software problems. So having an intimate conversations, admitting you have a problem, not only is beneficial for the customer that it can talk, it is also beneficial for Palantir, because you as a sort of a problem solver, you need people to actually expose what the problems are in order for them to solve them.
All
Yeah,
right.
I was just going to say that I think that the AIPCon serves a different purpose. It's more like this viral moment, that spreads the news of Palantir on, where you see use cases. And then the AIP Bootcamp is more like the people who have seen Palantir, they can let they know that they're interested and actually like test drive the product. So I would think that because they have done a lot of AIP, they have a lot of customers clearly, because they're doing 70 bootcamps. And I think when they're running out of these AIP bootcamps, then they will do an AIP con again to sort of boost the interest. Yeah. So I think both is needed.
Let me do these super chats real quick. Is Arnie wearing his Alex Karp costume? Got the white shirt, so he's doing that. Gene Kennedy, thank you for becoming a YouTube member. Go ahead, Arnie. You're gonna say something.
The white t-shirt was chosen on purpose to honorate the man who is not afraid to honorate us with not one but many bangs on the table.
These are good bangs this time. Happy Friday. Smash the like button. Thank you for that, Heinze. He said, we're not getting laid, but we're about to get paid, hopefully. Some people are up a lot on their Palantir position because they got in a pretty good average. And then like Vince has $8 average, so he's killing it right now. Last question: Ukraine losing the war, would this be bad for Palantir? There's a lot of news coming out that Ukraine is in a interesting situation right now. I don't know about this one. Any thoughts you guys have?
They also discussed it on the All In podcast. David Sachs was someone, I would say, among the few who started underscoring, hey, look, the Ukrainian war is not really on the Ukrainian side as media seems to push. Very hard to judge from outside, but it is true that Palantir exposed itself quite a lot on this, so there could be some negative highlights. My simple reasoning is if there is now this fatigue, there could be a hint that or now war escalates or we go to dealing phase. How you say
negotiation
negotiation phase. So would be negative, but at the other hand, I think it is important to see something changing right now, because what we expected to be, okay, maybe by the end of the summer we are done. We are definitely not done yet. And I think it is important to get closer to the ending. So, or you negotiate, or you escalate so that you negotiate.
Yeah, I think that it will depend very much on how it's spun. And what's sad for me on this Ukraine-Russia conflict is that we knew that like they should have just negotiated and skipped the war. And now it's like 2 years, lots of money. And now we're back to the same point. And I think if you go to Russia, you could say that, yeah, the war is not looking good for us because we didn't take Ukraine and they're taking these few regions. And we know that Russia wants a buffer between NATO and Russia. And then if they separate these countries out of Ukraine, then they do get this buffer zone. But instead of if you look at the map, instead of the buffer zone being like this big, it's like this big. So I don't think it's like, I think both sides have lost a lot. So I think that if they negotiate now, the US is going to say, like, look, Ukraine wasn't taken over. And that's a huge win because we held back the Russians. And Russia is going to go home and say that, look, we still have this buffer zone. It was going to be taken away. So yeah, it's a sad thing. And I don't think it will have negative effects on Palantir.
Yeah, I don't think it'll have negative effects. I mean, at the end of the day, wasn't supposed to win the war. It's just helped them, be more competitive in all of this horrific stuff that's going on. You look at the numbers of people that Russia has versus Ukraine; it's quite substantial.
Yeah, like Ukraine was supposed to be completely overrun in like 5 days, and basically what Palantir did is that it made them survive, and it looks like they're a little bit better, and that's a huge win from where they were.
I think, I'm not a geopolitical analyst or anything like that. And regardless of however I caveat this, somebody's always going to crucify me in the comments, and that's okay. But I think that the whole thing is very much similar to like how the United States had the war in Vietnam. Ukraine is fighting for their lives. Ukraine is fighting for their nationality. Ukraine is fighting for the life that they live on a day-to-day basis. And it's very hard for a country to come in and just take it over. It's not like it's back in the year 1000 or something like that, where they're able to just starve people out. I mean, people are very resilient. And so the way I look at it is eventually Russia is going to run out of the will or resources to truly want to keep going. And I think that eventually they will get tired or go on to some other sort of proxy war that they want to fight with the United States. And eventually, things will kind of cease up in Ukraine. And it could very well be what we're experiencing right now in the Middle East. And it could very well expand even further. The sad thing is with all this is, unfortunately, people continue to die. And I would rather just there be no fighting in the world. I'd rather us all just work together to kind of have a brighter future, interplanetary species, just like Elon wants, all that sort of stuff. But I know that that's kind of a very far-fetched idea. But at the end of the day, I think it's a lot more difficult to say win and loss, because even though you could say the United States lost against Vietnam, at the end of the day, like, it wasn't like the United States ceased to operate, right? It's going to be very similar for Russia. Even if Russia loses in Ukraine, it's not like Russia's going to disappear overnight. So it's not like this typical sort of thing that we're used to kind of seeing, like, oh, this country gained its independence or this or that. I mean, in reality, I think, unfortunately, it's just going to be a long proxy war. And even if it does cease, in 5 years, 10 years, who's to say that they're not going to go at it again, just like in 2015 when they did with Crimea, right? So it's just an interesting topic and something that will probably continue for a lot longer than I think we all believe.
All right. That is it for us. Thank you, everybody, for joining for another episode of Palantir Weekly. We are done for this week. Monumental earnings. Stock obviously did well. We'll see if it holds up. But in terms of the trajectory of the company, it's just incredible. I mean, I think we're seeing some real potential here for this to be the company we all dream it can be one day. and we'll keep covering it every single week on Palantir.
That's right. Thanks, guys. See y'all.
The
That's it. Thank you,
Microsoft
everybody.
of this century and millennium.
We'll see you guys next week. Bye-bye.
Ciao, ciao. Oui, là.